Hi guys, welcome to Trades Crafter. I'm Emma, and in this video, I'm gonna break down one of the cleanest and most beginner-friendly strategies in trading, the retest breakout strategy. We'll go step by step through what support and resistance levels are, how to spot a real breakout, what a retest is and why it matters, and how to place your entry, stop loss, and target the smart way. This is a pure price action method, no indicators, just logic, and yes, logic still counts as fun. Don't forget to hit that subscribe button and give this video a like before we dive right in. Support and resistance are two of the most important concepts in trading. Support is a price level where the market tends to stop falling and bounce back up. Think of it as a trampoline for prices, minus the risk of falling off. Resistance is where price struggles to go higher, like trying to limbo under a bar set way too low. These levels are key because traders watch them closely. When price finally breaks through one of these levels, that's where opportunity and maybe a little celebration dance comes. A breakout happens when price moves strongly above resistance or below support, breaking out of a range it's been stuck in. This often signals that new momentum has entered the market. Buyers or sellers are now in control, but not every breakout is real. Sometimes price breaks a level, then reverses, known as a fakeout or the market's version of ghosting. To avoid that, we use the retest, a confirmation step that filters out false breakouts, because nobody likes a flaky trend. A retest happens when the price comes back to the level it just broke. Imagine price breaks above resistance. It then returns to test that same level, like a nervous first date. If it holds, meaning buyers defend that level, the breakout is likely real. This step is powerful because it confirms the level is now acting as support instead of resistance. And this is where we prepare to enter the trade after the retest and a confirmation candle, our market's way of giving a green light. Once the price breaks out and comes back to retest the level, that's when we prepare for our trade. But we don't jump in like it's Black Friday at a department store. We wait for something very important. The confirmation candle, strong bullish candle, a large green candle with a full body and small wicks. It means buyers are confidently pushing the price up, like someone charging through airport security with zero carry-ons. When to enter? Place a buy order just above the high of this candle. Bullish, engulfing pattern. A two-candle pattern where the second candle, green, completely covers the red candle before it, like a giant blanket on a cold night. This shows that buyers have taken over the momentum. When to enter? Just above the high of the green engulfing candle, rejection candle, a small body on top with a long lower wick. It shows that price dropped, but buyers rejected the lower levels and pushed it back up. Kind of like your coffee spilling, but you catch the cup before it hits the floor. When to enter? Place a buy order above the high of the hammer. Strong bearish candle, a big red candle with a thick body and small wicks. It shows strong selling pressure after the retest, like everyone suddenly realizing cardio isn't optional. When to enter? Place a sell order just below the low of this candle. Bearish engulfing pattern, a two-candle pattern where the second candle, red, fully covers the green one before it. This means sellers have taken control. When to enter? Just below the low of the red engulfing candle, rejection candle, a small body on the bottom with a long upper wick. It means price was pushed up, but sellers rejected those higher levels. The market's version of not today, friend. When to enter? Place a sell order below the low of the shooting star. If the candle is weak or doesn't clearly show buyer or seller strength, it's best to wait. Kind of like waiting for your coffee to finish brewing before deciding if today's Monday meets your standards. Doji candles, tiny bodies with long wicks on both sides, mean buyers and sellers are undecided. Skip the trade or wait for the next candle. Likewise, if you want to buy and a red candle forms, or you want to sell and a green candle forms, do not enter. The market isn't supporting your direction, and neither should you. Once the retest is complete and you see a confirmation candle, place your entry just above the high of the confirmation candle. If you're trading a breakout above resistance, buy setup. Or just below the low of the confirmation candle if you're trading a breakdown below support, sell setup. That way, you only enter if price actually continues in your direction. No blind date surprises here. Risk management is everything. Place your stop loss just below the retest zone or below the low of the confirmation candle. If the breakout fails, the price will likely fall below this level, and your stop will protect you from a bigger loss, like an umbrella in a sudden downpour. You can choose a target in two ways: a fixed risk-to-reward ratio, for example, risk 10 points, to aim for 20 for a 1-2 reward, or the next key resistance you see on the chart, which is like aiming for the next exit sign on the highway. This helps you stay consistent and never risk more than you plan to gain. Here's a quick recap of the retest breakout strategy. Identify a strong support or resistance zone, wait for price to break out, wait for price to retest the breakout zone, look for a confirmation candle, enter above that candle and place your stop below. Set a target based on twice your risk or the next key level. It's price action at its purest, perfect for beginners and seasoned pros who still enjoy a good metaphor. If you found this strategy helpful, please give the video a like and subscribe for more beginner-friendly trading breakdowns. If there are other strategies you'd like me to cover, smart money, momentum, scalping, drop a comment below. Fancy joining a community of like-minded traders? Hop into our Discord, and for algo access or more resources, head over to tradescrafter.com.